So, you've seen it happen, right? A company you're watching announces a stock split or a bonus issue. Suddenly, the headlines are buzzing, everyone's talking, and there's this energy in the air. But what's really going on? What does it actually mean for your money? Is it time to buy? Is it time to sell? Or should you just ignore all the noise? Let's get into it.
Yeah, this is the big question, isn't it? You see the stock price just take off after news like this, and it really feels like the company is just printing free money for everybody. But is that really what's happening here? Let's find out.
Okay, so we're going to cut through all the hype and get down to what's real. We're going to figure out what these moves actually do to the value of your portfolio. That way, you'll know the difference between a real opportunity and just a lot of hot air.
All right, first things first, let's look at how these things actually work. Stock splits and bonus issues. They sound like two totally different things, and technically, they kinda are. But as you're about to see, when you look at the company's total value, they both end up in the exact same spot. So a stock split is exactly what it sounds like. They take your one share and poof, split it into 2 or 5 or 10. A bonus issue is a little different. The company gives you brand new shares for free, kind of like a gift. But, and you gotta get this, look at the scale down there. In both situations, the total value of the company, its market cap, doesn't change by a single rupee. It stays perfectly balanced.
You know, the classic pizza analogy is absolutely perfect here. You can cut a pizza into 4 big slices, or 8 small slices. You have more pieces, sure, but you don't have more pizza. It's the same amount of food. The company isn't creating new value out of thin air, it's just slicing up the existing value differently.
Okay, so wait a second. If the total value of the pizza doesn't change, why does the stock price usually shoot up on the day they announce it? Well, that, my friend, is all about human psychology.
So what's all the excitement about? It's simple, really. An announcement like this is a huge signal. It's like the company's own management is shouting from the rooftops, "We're so confident in our future that we expect the price to keep going up." That confidence, plus a lower share price that feels more affordable, just sucks in a whole new wave of investors, and that demand pushes the price up.
And hey, this isn't just some textbook theory. Look at what happened in the real world. Bajaj Finance announced, and the stock jumped 5%. Adani Power, a massive 20% surge. They actually had to halt trading because so many people were trying to buy in. That right there is the power of the announcement.
But, and this is a really big but, it's not always a party. An announcement isn't some magic wand. Think of it like a rocket engine. It provides a powerful boost, but you can't launch a rocket if it's chained to a giant anchor.
Here's a perfect example. InfoEdge. They announced a bonus issue and the stock still tanked by 25%. Why? Well, that giant anchor we were just talking about, for them it was the entire tech sector, which was really weak at the time. This proves the #1 rule. A fancy corporate action can't save a stock if the underlying business, or the market, is in trouble.
Okay, now let's talk about the part that gives every new investor a heart attack, the X date. You've seen the stock climb after the announcement, everything's looking great, and then you wake up one morning, check your portfolio, and it looks like the stock just fell off a cliff.
Seriously, it's that stomach drop moment, isn't it? You see this huge red number next to your stock, and your first thought is, what on earth just happened? Did I just lose a ton of money?
Okay, deep breath. The answer is something called the X date. And no, the market didn't crash. It's not a disaster. It's just math. It's a pre-planned automatic price adjustment that the stock exchange makes to account for all the new shares that officially exist now.
For Adani Power, after its 1-for-5 split, that adjustment looked like this, an 80% drop. Overnight. Yeah, you heard me right, 80%. If you didn't know this was coming, you think your investment had just been wiped out.
But here's the magic trick. The price per share did drop a lot, but you now own 5 times more shares than you did before. So a much lower price times a lot more shares equals the exact same total value. The scale is still balanced. You haven't actually lost a single penny. It's all just accounting.
So if the announcement is just hype and the X date is just math, what really matters? What actually determines if you make money or not? Well, as always in investing, it's about what happens next, how the business actually performs.
This chart right here tells the whole story. Let's fast forward 6 months after all the dust settled. Look at Bajaj Finance and Adani Power, both fundamentally strong companies. They were up big time. But then look at InfoEdge, still dealing with those industry problems. It was down 10%. The split was just noise. The long-term result was all about the strength of the business. Period.
Okay, let's boil all of this down. What are the key things you absolutely have to remember the next time you see a headline about a stock split?
Here are the 4 big takeaways. 1. The announcement can be a great catalyst, but it's no guarantee. 2. That scary price drop on the X date? It's just a technical adjustment. Don't panic. 3, and this is the most important one. Long-term success always comes back to business fundamentals. And 4, the one true benefit is that it makes the stock easier to buy and sell, improving what we call liquidity.
This quote just nails it, doesn't it? The split itself is neutral. It's just moving numbers around on a spreadsheet. But the announcement of the split, that's the real catalyst. That's the psychological signal that gets the market excited. Understanding that difference is everything.
So I'll leave you with this final thought. The next time you see that news flash, the amateur asks, how many news slices am I getting? The smart investor asks, how good is the pizza? Because when it comes to your money, that's the only question that truly matters.